No mai, haere mai, welcome to 3 News. The rate of inflation has fallen to its lowest level in 3 years. The Consumer Price Index for the June quarter shows the annual rate is now at 3.3%. Now that's down from the 4% recorded in the previous quarter. But that is still higher than the Reserve Bank's target of 1 to 3% annual inflation. Quarterly inflation was flat at 0.4%. Rent prices and council rates are still sticking points, up 4.8% and 9.6% respectively, while insurance costs are a whopping 14% more than a year ago. But with inflation falling, pressure is growing for interest rate cuts, including from the acting Prime Minister. Zane Small reports.
For 3 decades, Neil Seck has owned and operated Salon 101. In the heart of Auckland City, it's a prime location, but the 3 C's, construction, crime and COVID, have caused business to dry up.
If you look at turnover, it's easy, 50% down.
On top of that, high inflation has stripped his customers of their spending power.
Inflation has made people very cautious and in particular come and spend money at the salon.
Today, though, a sign of better things to come. The inflation rate is now at 3.3%, the lowest it's been in 3 years, down from a high of 7.3 in mid-2022, when supply and demand went haywire in the wake of COVID lockdowns. Big price drops for fruit and veggies, medical products and household appliances have helped reduce inflation in the 12 months to June. But domestic inflation remains a barrier, with prices still soaring for rents, council rates and insurance.
Overall, though, the inflation rate is trending down. It's still not within the Reserve Bank's target range of between 1 and 3%, but there is good news for mortgage holders. Economists are optimistic that today's data tilts towards earlier and larger cuts to interest rates.
ASB economist Mark Smith is still predicting a rates cut at the end of the year, but there is a chance of it happening next month.
At the moment, we expect a 25 basis point cut in November, but risks are skewed towards the Reserve Bank cutting earlier than that.
August is when the Reserve Bank gives its next official cash rate update. And with the economy in such a slump, it's coming under pressure to provide interest rate relief, including from the acting Prime Minister.
I can't tell the Reserve Bank Governor what to do, but you don't need an economics degree to see people are hurting, inflation is going down fast and relief is required.
The Reserve Bank acts independently from the government.
Relief is required. That's essentially an instruction to the Reserve Bank Governor.
It's not an instruction at all. It's an observation around how many people see it right now.
People like Neil Seck certainly do, but he's feeling optimistic.
I do have hope, we've got to live in having hope.
Because with all this talk of interest rate cuts, he has a bit more confidence that his customers will return for their cuts.
We're joined now by our senior political correspondent, Jenna Lynch. Jenna, did David Seymour cross a line with those comments?
He's perhaps not crossed the line, but he's sailing mighty darn close to it, effectively publicly telling the Reserve Bank Governor that the public is fed up, the government feels like it has done its bit, and now it is over to him. It's not the only time that David Seymour got a little bit loose-lipped while as acting Prime Minister today. He also slipped up when he was describing the government's recent Pharmac funding boost for cancer medicines, calling that surprise spending. Now, when 3 News asked him further questions on that, he revealed that he, as Pharmac Minister, only started working on that policy after the budget, after that public outcry, which seems to directly contradict what the Prime Minister was saying back at the start of June, that it had been in the works for the previous 6 to 8 weeks. It undermines the government's narrative that this was simply a communications error and points more to this being a rush job, fix-it job in the face of a public backlash.